This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Good morning and welcome to another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and today on the download, I have kind of an interesting mix of market news to bring you today. What we haven't covered a lot is healthcare or more specifically health insurance. We have rather an interesting move in a market segment that is relatively sleepy most of the time. United Healthcare is moving to buy LHC Group for a $5.4 billion all-cash deal, cementing United Health as the largest U.S. insurer. What this will actually mean for you as the insured individual? Well, it's hard to say. U.S. insurance is notably a very tepid market when it comes to what this actually means for the consumer or the investor, but it should certainly seem to indicate that people holding United Health Group stock will certainly see that stock price at least edge up, with it being the largest insurer and having the largest base of premiums being paid into it in the United States. So something interesting to look at from an industry that we rarely cover. Now getting into the larger stock indexes, the Dow futures continue to rise on what is being seen as a positive marker in the Russian-Ukraine conflict. Talks are currently being held in Istanbul between the two countries to try to work out some type of a negotiation for peace in that conflict, which is very widely seen as a positive movement. However, there were some issues with individuals that were attending another round of peace talks that had people scratching their head, as several people were showing symptoms of being poisoned, including the extremely rich owner of the Chelsea Football Club, Russian billionaire Roman Abramovich, coming out of those meetings not looking too well and showing symptoms of poisoning. So we will see what the stock markets do on these new round of talks that are happening in Istanbul. Definitely something to keep a very close eye on. Following the trend of some very odd things happening in different markets, the IPO, or the initial public offering market, which is essentially companies that are new to the New York stock exchanges that are looking to become public companies. The IPO market saw its slowest quarter one in 6 years, as the deal flow slowed to only 18 companies becoming public in the first quarter of this year, raising only $2.1 billion. As a reference, companies such as Uber and Facebook had seen billion-dollar capital raises, well over billion-dollar capital value raises in their just initial public offering as single companies. So seeing such a market slowdown in the initial public offering market is something to keep an eye on, as something that might be indicative of less free capital being actually looked to invest in emerging markets in the securities market. So whether or not that has an indication of future market slowdowns or what that actually means, hard to say, as this has kind of been the first time in 6 years that we have seen just a slow market. And we have certainly seen a very robust marketplace over the past 6 years, even through the different legislative and things that we have seen in the market. So what that means, hard to say. Tesla stock going absolutely bonkers over the past few days. Tesla announcing a stock split, which they had previously done back in 2017, but the stock split announcement causing an 8.1% jump in prices on 3/28. Now, this is bringing Tesla's share price to over $1,000 per share again, which is absolutely crazy looking at how much value is being assigned to this particular security. Now, this is also an interesting light being shed on this, as they have also announced that they are slowing down production or ceasing production in some cases in China due to a recent spike in COVID-19 in that country. So with the announcement of the stock split and the Chinese production being halted, we're still seeing Tesla trading at over $1,000 per share. So definitely something to be looking at, and some additional value that can definitely be gleaned from investing in that particular security right now. Moving over into manufacturing, we're seeing kind of a regrettable trend continue with auto manufacturer General Motors announcing the removal of the Buick Encore and the Chevy Trax from their lineup. This follows suit with Ford several years ago, removing almost all of their car production, moving over simply into manufacturing only trucks and SUVs for this manufacturer. Now, this is an unfortunate trend of the affordable compact car basically being cut out of the United States market. Everyone always asking for, more affordable cars. And we have certainly covered that in this podcast of just how expensive used cars are and cars in general. And with the removal of affordable cars being taken out of the new car lineup, this is going to certainly not do anything except for help to drive those prices continually higher. So an unfortunate thing to see, but if people aren't necessarily buying them or companies aren't making money and selling them, not necessarily an unforeseen thing happening. So again, GM announcing the removal of the Chevy Trax and the Buick Encore from their lineup, something that might ultimately hurt the bottom end consumer, but if it helps for share prices, there's certainly some value and some money to be made on trading on that. Gold is edging lower for the first time in the past few months as new restrictions on Russian gold reserves are seen to be looming on the horizon, with another round of sanctions that are proposed going to be issued by the U.S. government and other world governments as well. So although gold has been seeing a relatively stable and markedly upward trend, seeing a little bit of a downturn on the beginning of this week, although not anything taking it out of several month trading highs that it is enjoying right now. Yields on 10-year Treasury notes have risen past top-line markets not seen since the 1980s. Yields rose nearly 34.5 basis points in trading this week. The recording of this on 320. That's over the recording of this on 3/29. So something definitely interesting to see. Again, with the download, we're covering kind of a all over the place market right now. It is kind of hard to pin down exactly where the value is for people, as we're seeing movements in markets such as healthcare that we rarely see. We're seeing production slowdowns in general manufacturing with the removal of some lineups of different cars, highly inflated stock price increases in other manufacturing sectors, such as with Tesla, and commodities edging lower and treasury bills yielding up. So definitely kind of a crazy market to look at right now as the recording of this podcast. So the best thing I can tell for people listening to this is just stay vigilant, keep educated, and keep looking for value where other people's may not be finding them. This has been The Download. Thanks for joining. Today on the what is the velocity of money? A term that economists and the talking heads might occasionally throw around when you're looking at the news or watching or reading some type of financial reporting is the velocity of money. Now, although this may sound like something straight out of a Tom Cruise action movie, it definitely is an important marker in financial reporting to be aware of and exactly know what it is. The velocity of money is the measurement of rate at which money is exchanged in an economy. It is the number of times that money moves from one entity to another. So if you had $1 bill and you paid it to buy a pack of gum, how fast that the 7-Eleven turns around and spends that $1 off their books. It also refers to how much of a unit of currency is used in a given period of time. Simply put, it is the rate at which consumers and businesses in an economy collectively spend money. It generally means that an economy is doing better when there's a higher velocity of money, because that money is traveling farther around. People are buying more goods. Companies are spending more money on infrastructure and other things. So if the velocity of money is high, typically a good marker for things going on. This has been the What Is. Hi, and welcome to another edition of the Alternative Investing Advantage podcast. We are pleased to welcome back our good friend Adrian Smude with Lifestyle REI. He is a very successful mobile home investor in the Florida area, local to Polk County and Lakeland, and we're pleased to have him on again today. Adrian, thanks for being with us.
Alex, thanks for having me back.
Absolutely, my pleasure. So, one thing that hasn't happened that everyone was kind of looking towards was real estate markets kind of leveling off or getting a little bit more normalized. It is still absolutely crazy. I know, especially here in Pinellas County where we're at, it's going wild. I mean, it's absolutely, we kind of have a unique situation here in the St. Pete, Tampa area with very low inventory, especially in St. Pete, just because Pinellas County is completely developed. There's no new stuff coming out. And it really kind of helps to illustrate just how lucrative things that people often overlook, such as mobile homes and manufactured homes, can be. So, I really like having you on and getting this perspective, because it's something I really truly believe in. And I've seen people make tons of money with not having a whole lot of money to get started in it. So just kind of want to go off. What kind of stuff are you seeing in the market right now for mobile and manufactured homes? Start with stuff here in Florida and in our backyard, and then kind of segue into maybe some more national stuff that's going on.
So in general, not just mobile homes, with Plant City, Lakeland, the Central Florida area has been exactly the way you described Tampa and St. Pete. We not only have a massive demand, but we also have the Orlando and the Tampa investors both coming after the little market in between, plus all the regular people. But mobile homes in particular, I've been joking around that people have finally come down to my level, and I kind of put air quotes there, that they are finally looking at mobile homes because they can't find yield anywhere else. Years ago, they would just kind of made fun of me and said, hey, why would you buy mobile homes? Well, now a lot of people have been getting into mobile homes because they're cash flow. That is the main thing that we focus on. But the supply and demand has actually risen the prices of the mobile homes a lot. So what I was buying in 2019 for 20, 30,000, I'm seeing selling on the MLS to out-of-state buyers for 60, 70, maybe even $90,000.
Wow.
So there has been appreciation that people think that can't happen in an old mobile home. But when you get down to the basics of supply and demand, it happens.
Yeah, absolutely. And you're talking about older mobile homes. These aren't just like new double wides, newly manufactured 1 to 2 years old. These are, mobile homes, built in the 60s, 70s, 80s and stuff like that, correct?
Exactly. The newest I've ever purchased is a 1997. So that's really new in my world. And a lot of people think that that's an old one.
Yeah, no, I remember when I kind of first started my career in self-directed IRAs. I had a client up in North Georgia near Lake Lanier that I was kind of blown away. I mean, one of the cooler stories I've ever seen. I don't know if I've told it on this podcast. He had bought a small old trailer park. I think it was 9 lots, and each lot was a 1/4 acre in this little park. So they're huge lots. So I kind of had the cool experience of going through and applying for replats and divisions on it. And he took the 9 pad and subdivided each one into thirds. So then he went from 9 to 27 pads, and he was paying to have these old trailers brought in. And I was blown away. He was like, yeah, I got this work order for a 1978 Hudson to get dragged over. I'm like, buying a trailer from 1978. And I think the guy had bought this place for like, I wanted to like a $180. Had 9 mobile homes on it, and then bought it for like a $180. I think he spent maybe like $100,000 in total bringing stuff in and all the other stuff. And I think it was cash flowing like 20, 30 grand a month after all said and done.
Wow.
did it all in his IRA. It was the cool part. So it was yeah, the old stuff is kind of where I've seen, I don't think I've seen many clients actually something fell seen many clients buy the new stuff. So it's interesting to see that that's kind of still the case with you, and still focusing on these kind of things. So have you also seen this kind of appreciation happen with park homes as well? Because I know you like to focus on mobile homes on land. Has the same kind of rapid appreciation and crazy pricing and stuff gone with stuff that has lot rent associated with it?
Yes, it definitely has, for the same reasons. There's nowhere for people to live. So even if people maybe don't want to live in a park, they're living in motels right now in our area. And it's not so much the person, it's the fact that there's nowhere to live, which is crazy for some other states to be thinking there's just nowhere to live, but there's a lot of spots around us. So anyways, yes, the parks, the units inside have gone up in value a lot, purely because there's not enough places for people to live. And the beginning of the year is actually a good time to sell those and a bad time to buy them, because we have tax returns.
Mm-hmm.
So now the investor is competing with the person that wants to live in it, because the person that wants to live in it has a big chunk of money that they can use now.
Yeah, absolutely. So that brings up something interesting that I've never really thought of. And maybe this is kind of unique to mobile home investing, is the time of the year. I mean, single family real estate, it doesn't matter too much, when you're talking about in general, if it's going up, it's going up. It doesn't matter if it's January, April, November, stuff's always kind of hot, with the exception of maybe stuff that's really specific to like vacation rentals. If someone's trying to offload something off season, maybe it's not, but I would imagine pretty much the case. But do you see a lot of cyclical things that people should look at if they're looking to get into mobile home investing, of like a good time of year? Like, it's always a good time of year to sell a motorcycle right when summer comes up, and it's a bad time in the winter. Is it the same kind of thing, with mobile homes to an extent? And what does that kind of look like from both sides of the table?
So for me, what I focus on are the mobile home with the land. So in that case, it's pretty much like the single family site built that you mentioned. There's always a good time to buy. But if you are looking at age restricted, and that's usually done in a park, then there is a season. So you buy before the boogeyman, Halloween, and you sell before the Easter Bunny. So that's the snowbird season down here in Florida. So that's when people buy and sell. So you wouldn't want to be buying something in Easter, because if you're in an age restricted community, you might hold that all summer paying lot rent.
Yeah.
I've never dealt in that world, and that's one of the reasons. But I do know people that have really studied it, and they make money because most people won't touch it. And that's one reason the mobile home space I got into have been successful, because most people wouldn't touch it. And I'm even too scared to go the age restricted. So you have even less people there, which means you can thrive there if you really learn the market.
Yeah, and that's a market I'm trying to get more information on personally, because personally I'm also keeping my eyes out for mobile homes and stuff. I got some money. I'm trying to get out there working, and everything that I'm finding is all age restricted, and these lot rents are getting crazy. I found a deal the other day through a Facebook group that I'm on, and it looked pretty good, well updated. I think it was like a 1995, 98 double wide. I think they wanted like 28, 29 for it. And I saw the price. I'm like, oh, this is great. And I started looking into it. It was almost $800 a month in lot rent. And I'm like, for what's the rent roll on that going to be? I mean, I might be getting maybe 18 on it if I'm lucky. And it's probably going to be seasonal 55 plus stuff. That's a tough nut when they're talking about these lot rents, and that's not even too crazy on the upside of the lot rent in Pinellas County. I mean, I think the lowest ones that I've seen, there's a park that I ride on, the trail I ride my bike on, and I've poked around in there a few times, ridden through and seen any for sale signs, and I think that one was like the cheapest, and it was like $450, almost $500 a month. So those lot rents can kill you. So obviously you like to focus in on stuff that doesn't have lot rent. You got taxes and registration fees and stuff like that. But what are some of the kind of deals that you have that you've been seeing coming up in Polk County? Maybe if you have some recent ones that have come up, and kind of walk us through, if they went smoothly, if there was some issues, and what kind of stuff that you're seeing as emerging challenges in your market.
So I have always done the traditional marketing, the signs at the side of the road. I've done letters, all the stuff that investors do. And over the years, I found that networking has become my best lead source. And that used to be 50% of my deals a year. In the last few years, it's been 100%. So we have bought two recently, one at the end of 2021, and then one here in the first quarter of 2022. And they've both been referrals off market. Could be a realtor, or it could just be someone that I know. And they both are actually the newest I've ever purchased, 1997s. They are both going to be some of my best deals I ever purchased in today's market, where people say they can't find stuff. One of them, I even told her, hey, why don't you go and sell this with a mutual friend that we have that's a realtor? She didn't want to deal with the headache of the tenant. They had some reasons, but I suspect the tenant was a decent amount of the reason we are going to end up having to ask him to leave. We did a significant rent raise, over 100%, because he didn't want to have a communication. We tried to talk to him. Anyways, that's a problem we are solving. But it's in 1997 on an acre of land, which that's a big piece for me. Is I like the land because that's a very long-term, I call it my lotto ticket. And that's even in Plant City in the path of progress. I don't truly get a lot of those. I get a lot that we buy that are down a dirt road, off of a dirt road. The dirt underneath the home's probably going to be worth the same amount when I die one day. But this one excites me because there's land. So a builder might cash me out one day, but I still buy it based on cash flow. We're going to probably have, I'm suspecting with some repairs after the guy moves out, maybe 120 in it. And it's going to rent for 1,800, maybe $2,000 a month. And it's worth 200. I mean, you don't have to get a calculator out to figure out that's good enough.
Yeah.
Now, that's a really good deal, and it's bigger numbers. A lot of people think of mobile homes being, like I said, $20,000, $30,000 that I used to buy, and I still look for those. But today I'm looking to upgrade a little bit of my portfolio into newer homes and also more land. But if that $20,000, $30,000 mobile that I bought years ago that looks ugly and scary, if that comes across my plate, I'm buying it.
Nice.
I'll still buy it. It's about cash flow. That's what the numbers come back to.
So it kind of brings up an interesting thought that I would have, kind of going back to the guy that I saw that developed his little park. Now you got an acre of land. I mean, you can fit a whole lot of trailers on an acre. Would it ever be something where, let's say, the tenant moves out, that you might look to, bring in some more trailers and put in some more septic and, have, kind of try to increase your return on that one parcel? Would there be like a lot of issues for doing that, or a reason you would or wouldn't think about maybe doing that?
My biggest reason for not doing that is it sounds like work, and I don't like to do a lot of work. The other reason is, and we look into this sometimes, but I never buy for that reason. The municipality where this is at in the county part of Hillsborough County and Plant City area, they're not gonna allow it. I did buy one in 2021 that was on a double lot in Lakeland, but the home was sitting just enough towards the other lot that I wouldn't be able to split it and put two homes on it without actually moving the current one. And then it became not worth the work, time, money, or anything like that. But if it ever burned down one day, then yes, I now have two lots and I would put two homes there, or sell one off and, whatever I would do there. But it's a future value, but I don't do my math on that from the beginning because that's not my niche. I like just to buy it and rent it as lazy and simple as possible.
So you bring up your math. What are some things that kind of initially that you look at with regard to a property? Are there like
a lot of people say that, they're kind of price agnostic to a point. A lot of people, at least with what we deal with, are cash flow minded. So, if it's 300 grand, but it, cash flows correctly, then great. Obviously you like to buy something cheaper, but if the cash flow is the cash flow and you can kind of make it work. What are some kind of guidelines that you generally go into? I mean, obviously, to a point, you're not going to pay $1 million for a mobile home, probably, unless it's cash flowing 10 grand a month, in which case, let's find the money. So, what are some kind of, general guidelines that you have in your mind when you go into this for what you do and the markets that you kind of operate in?
You're right. I start with cash flow, but I add a few other values that I cannot give a full formula for. I call a headache value. Is this property going to cause me a lot of repairs? So that's why I like this newer one that I just bought, because it should not cause me as many repairs. It has a newer AC, a newer roof. The bones are stronger than a 1970s. And then the most important is where I'm buying. Is the area going to attract someone that wants to live there and they want to live there for a long, long time? Or is it going to attract someone that has to live there because they have nowhere else to live? And as soon as something else comes up, they're going to move. I don't believe that it's the structure of the home that makes people leave. I believe it's the area. A 1 acre of land fits my avatar resident a lot. Fenced yard, sheds on the yard, privacy. They like all of those things. They can bring their utility trailer there. A lot of my residents are blue collar, handyman, handywoman. I really start there. And then if it fits that box, now I'm willing to pay a little bit more. If it's not going to fit that box, I'm not going to have as easy of a time, because the resident's not going to like my system. And also, I like to systemize it. So it's not just that they're not going to like my system. I'm probably going to have more headache. And if I have headache, I want to get paid for headaches. I mean, that's really how I value a lot of it. Back to the actual numbers, I don't care about the value of, so I said it, this one is worth over 200,000. I never ran my exact numbers. I just know it's worth at least 200. And I told some people and they're like, no, it's worth 250 plus. I'm like, I don't really care, because I'm not going to tap into that equity and I'm using it for cash flow.
Yeah.
I do care if a builder comes and says, hey, I want to buy the land. Then all of a sudden I will care. Yeah, exactly.
Yeah. You brought up kind of a really interesting point though, of, buying for, is the person going to live there because they have to, or because they want to? You kind of mentioned path of progress. That's a really good thing to kind of bring up, because, what exactly would you look for? I mean, it's easy enough if you look at a large metro area and you say, okay, great. Well, they just built a new big they just built a new highway over there. They put in a Publix, a Walgreens, there's a Whole Foods. Those are kind of the easy ones to pick at. It's like, okay, yeah, they're going to be building, more people are going to be moving there. There's going to be houses. Okay, real estate's going to go up. But specific with mobile homes, the type of people, obviously it's kind of broadening every day. We used to kind of think about, let's say, a lot of people that work, maybe like point of place jobs, like, there was construction project, the construction or oil field workers, things like that were a lot more blue collar people coming in and living in these. So it's kind of easy to pick out those. But what are some of those path of progress things that you would look for, just kind of on a very 30,000 foot level of someone saying, hey, maybe there's, like me in Pinellas County, like, obviously there's no path of progress here. I got to look out in places like Polk County, into like Mayaca City and places like that to find these kind of things. So if you were kind of coming in from an outside, what are some big generalizations that you would say, okay, cool, this would make sense for, something that might be a good play in that area?
I'm glad you asked me to stay general, because that's about all I get. I do not get deep into the data. I don't even research any of that. Path of progress. I live in Plant City, so I go to some of the commissioner meetings. I kind of just know the direction it's growing. And north of I-4 is a direction Plant City wants to grow. They got utilities up there recently, so now they're going to be starting to build a little bit of commercial, gas stations, things like that. They're building, I don't remember, a few hundred homes. That talk had been there for a long time, but they have broken ground. I don't like to buy based on that happening because I know that sometimes it doesn't happen or sometimes it takes 10 years.
Yeah.
It's still in an area that someone wants to live. And honestly, if it did not happen, it's very attractive because people north of I-4, they want to live on an acre of land. It's nice, it's private, it's scenic. I mean, I don't even know if you can build under an acre of land up there. So that's where people want to live. If they build all these communities, all this stuff, those people actually might want to leave because they're not going to be in the environment they want. And if that happens, I should still be able to rent it, but then probably the builder's going to want to buy it. So I kind of have both sides. That's the way I look at it. And also I just drive around. I bought one of my other lotto tickets. There's 2 roads that have mobiles on it, and everything else in the area are $250,000, $300,000, $400,000 homes. Every other street. So I have one home on 2 roads that have mobiles. We know at some point a builder is going to pay enough to get everyone on that road to leave.
Yeah.
And I'm going to be part of that. I'm just going to wait out until everyone else is ready to sell. I don't have to do a lot of research there to know that that's going to happen.
Yeah, absolutely.
I call it my lotto ticket.
Yeah, and those are also kind of ones that also would help to look at that from the position of saying, hey, now I know what I maybe do or don't want to do to the property. As far as like upgrading. And I mean, obviously you need to have a good enough product for someone to consume. You're not going to have, something that's super run down. But when it comes to like a larger change out, if they need, let's say the kitchen needs to be, completely redone. Maybe it's a fix and paint versus new cabinets and stuff like that. For kind of that long-term recouping your investment on it. Because ultimately it's going to sell and it's going to get raised. And that's kind of the point. You've also brought up another interesting point of, you and I apologize for people listening to this. I kind of bounce around a little bit, but it's stuck in my head of when you look at these, you're investing, you call it your headache factor of not necessarily wanting to deal with, what you call headaches. And obviously that's hard to quantify. But when it comes to looking at mobile homes, from someone coming into this, brand new, it's easy kind of, and people aren't going to be able to see what I'm looking at, but he has a great background of let's just call it a slightly dilapidated trailer. If you are, buying it, it's a trailer. If you're selling it, it's a mobile home or a manufactured home, I should say. So, when it comes to that, what are some things that just, peg, right to 11 of a headache factor that you're just not looking to deal with, not necessarily tenant wise, but more so just on the property itself. If you come up to it, what is kind of the punch list of, if it gets to be 3 of these, you're done.
So that is a great question. It's got to start with one of my mentors, Lenny Simador. He says, when you're building, you buy what you can afford. And the trailer you're talking about, I bought that because I could afford it at the time. And I still didn't really want to buy it because for the people that can't see it, it comes with most of its siding. It looks really, really, really rough. And that's why I have it as a Zoom background, because it's an attention getter. I didn't want it because I'm not a rehabber. I don't know how to rehab. I'm not great at it. It's my weakest point in the entire real estate world is estimating costs and contract. I just don't like it. It's work. So I gave a very low offer. And then the guy said yes. Okay, well, I can figure it out. That's when, if I don't want it, I give a lower offer. And that's actually been some of my best negotiating because I didn't really want it. And I played a little bit more hard to get. These days, I will still do that. I will probably bring in someone that really knows what they're doing on the rehab, if it's a major rehab, or I'll just do maybe a rent to own to an investor that's going to do it, and I'll get completely out of it. That's what I would do today. But if it's going to be one of those older ones, again, we're talking 50s, 60s, 70s, whatever you see, just add more money. If the electric box isn't fully redone, you have bad wiring. If you see the gray plumbing and underneath the sinks that is in the 80s, just assume you're going to have to replumb the whole thing. It's not super expensive to replumb them because they put a lot of the water back to back. Like the toilet is usually back to the washer, and then there's a sink on the other side for the kitchen. There's not a lot of plumbing, and you can get underneath most of them. You want to check. So it doesn't costs a ton, but just plan you have to do it. And sometimes I have to do it right away, and sometimes I have to do it in a year, 2, 3 years. I'm a little more willing to take that risk. If there is a leak, I replace all of it at once. It depends on the home. You said that earlier. If it's not the best quality home, I'm not going to put the best quality materials and time and effort into it. If it's a really good quality home, I'm going to put more material, time, and effort into it. And that's not just the home, it's the area it's in. If you listen, I did not say age at all, because some of my nicest homes are 1960s because they have been fully rebuilt. So it doesn't mean the year, because you can rebuild them and put 2x4s in it, drywall, all the same kitchen that you put in any site-built home. It's what the structure, have they let the roof leak and termites have eaten it away, and now you have to truly rebuild the whole thing. Is the area a good area to start with? Those are a few things I look at.
Yeah. So you're saying that, if even if you come in and let's say a trailer's in a great area, but it's, kind of been, smacked around a little bit, it would be worth it to upgrade potentially rather than just kind of polish, and kind of bring it back to the level that it's at. So there is some potential for, people that, let's say maybe their niche in the single family world was rehab and upgrade, to kind of look at that if they're getting into the right areas. But it's not necessarily something that's as ubiquitous as single family. You kind of need to really look at a few other factors with that, because most of the time, site built single family, you upgrade, you can kind of raise everything around you. With this, you need to look more around the area and build to that kind of specific standard that's in that area, more or less. Is that kind of a good generalization?
Exactly. We have a 1972 right now that the guy moved out of, and it is the worst home on the street. And most of the homes on the street are site-built homes. This is a tiny little trailer down there. I could leave the bathroom cabinets, the vanity and everything. It could stay. I could, we'll say, do a very cheap spruce up on the bathroom as well. But we decided, well, let's go ahead and completely redo the bathroom. We're going to spend a few $1,000s more, but we're going to get a better quality resident, and we're going to have a better quality home. If that was down some dirt road, off of a dirt road, I probably wouldn't do that, because the person that's going to live there doesn't care as much. They care about the land more than the home.
Yeah.
And they may even want to do some of the upgrades, because I have a lot of blue collar people live there. This home is going to attract a different person. But I focus a lot on the avatar of who you're trying to attract and who will be attracted to that road. And let's find an end product that serves that person, versus I have one thing I do and I only do that no matter where it's at.
Yeah.
I don't think that works as well.
I think that's a really good distinction that people need to realize when it comes to investing in mobile homes, because you can kind of say, okay, here's what the rents around the area are, but it's definitely a lot more nuanced than that, because there's a lot of, I would say, variety in the people that are attracted to mobile homes. You have, single family site built, you have a generalization of people that live there. And it's kind of the same, just with a different price point. With these, you have a lot of variation in the kind of people and what they're looking for in these. Like you said, you have blue collar people that, probably a lot more people that want to do work on properties would choose a mobile home with land, because, you have maybe less eyes on it. You can have utility trailers, things like that are a lot more commonplace and accepted with this kind of classification of property, as opposed to, like an area I live in St. Pete. But that's kind of a definitely interesting thing to look at, is that you have to do a lot more maybe analyzation of the type of tenant that's going to be utilizing this property, as to what you're going to do to it and how you're going to market it to those people, right?
Exactly. And that's not just mobile homes. People should be doing that in their site-built homes. People do that in their Airbnbs. We do that in every class. If you really focus on who is going to live here, let me build this property to attract that person.
Sure.
I think that's the key to it.
And how do you find, what are kind of some easy kind of steps for finding the tenants for these? I know you said you find a lot of the homes from networking, but how do you place tenants? I mean, do you use like a property management company? How do you kind of go about finding these people, or do you just stick a sign in the yard and they kind of find you?
We do all of our own property management. It really, again, depends on who's going to live there. If it is a lower income property that is not that good, that pretty, how about that? It's safe, livable, but it's ugly. So it's a true handyman special. We do not put that on Facebook. We have found good people there, but we have too many trolls that get on there and talk negative about the property. And then the next person says, this is an upgrade, I want it. So every property, I believe, is an upgrade for someone. I could put all the money in it and get someone else, but it doesn't serve that other class of market of people. So the signs in the yard and the street corners, the bandit signs, those work pretty well for everything that we do. We do Craigslist still. A lot of people think that Craigslist doesn't work. It has still worked for us. We are starting to track to see how well. We've done a little bit of Zillow, but that's really it. We do Facebook again when it's a finished product, I'll say, that is not going to get the trolls after it. You can go everywhere else, but those three have worked. I mean, that's really it. We're in a really, really awesome market to be a landlord.
Yeah.
So we don't have to do a ton of work to get a ton of attention to the properties, but we also don't buy needing that top dollar. We want to be a little below the market so we get a lot of interested people, and then the system filters out most of those people, so we only get a few really good applicants.
Yeah, and I know this and before we kind of segue into kind of some current stuff that you have going on, I wanted to ask, it's all great and well to understand this, but when we're talking about the stuff that you're doing, what's kind of the average of your portfolio of, the boundaries of what you're getting in rent for these things? That's what a lot of people want to know. It's like, great, well, I buy this, what's my cash flow going to look like? So what are kind of the general ranges of what these things rent for in our area?
Well, the last two that we've done are both 3-bedroom, 2-bath, double wides. One's on a 1/4 acre and one's on a full acre. The one on a 1/4 acre, we rented it a few days before Christmas. So that is like the one bad time to try to rent something. And we got $1,610 for it. So $1,610. And I think that was low just from afterwards looking, but I was very happy because I was all in just under 100,000. That means purchase, rehab, and rehab meaning a brand new roof that I put on with permits, everything. So people thinking that just doing stuff on the weekend. And closing costs, that's full all in. Those are pretty good numbers.
Oh yeah.
It's in the path of progress as well, just because it's technically a Tampa zip code, and the locals make fun of me because I always say I don't buy in Tampa, and this is a Tampa zip code. And as you said at St. Pete, it's St. Pete. There are bad areas, but everything is going up in value. Tampa is the same way. Anyway, so then this other one that we just bought is we'll say we're going to be all in at 120, 125. 1,800 is conservative. But let's go back to the older ones. And I haven't bought anything in the last year that is in the 60s and 70s, but you could still pick them up for 50, 60,000 if you're really looking. And as a handyman special, you can still easily get 900, maybe even 1,000. I count a little bit lower than that because when we have another recession, I want to have room to come down if I need, even though we probably shouldn't because we're in the affordable housing space. They're still good numbers.
Yeah, absolutely.
I mean, we don't go by a 1% rule. That's too low in the mobile home world, in my opinion.
Yeah, no, and that's one of the things I love about these. And I try to promote people. A lot of people ask me, they come into, doing self-direction and being like, hey, what can I buy? Everything's so expensive. I'm like, you looked at mobile homes, and a lot of people kind of scoff at me. I'm like, it's, the check's clear and, the money comes in. I mean, you're providing a service, and a lot of people need affordable housing. And that's one thing you bring up. And I try not to get, too, topical with this and kind of keep it on the numbers, but it is a great service that is kind of being filled by this. You're not going to get a lot of affordable housing out of site built family, 3-2 block houses. especially in, attractive areas. But this is kind of one of the last bastions of truly affordable housing for people. That's not something that's government subsidized, where you don't have to deal with, someone that needs affordable housing that doesn't, necessarily want to deal with the government, because Section 8 on both sides of the table can be a pain. I've talked to people that have utilized it on the, renting side of using that government subsidy. We have a ton of clients that provide that in their IRAs, but, having to deal with property inspections and all that kind of stuff makes people, kind of not want to do that as much. And it kind of reduces the amount of volume of people that are putting houses out there. So, if people are investing on more of an impact investing and trying to invest with goodwill, this is definitely an area to look at, because you can provide that service of, affordable housing that people so desperately need. They talk about it on the news every day. This is where you can put your dollars to work to make that happen. So I think that's great that we bring that up as well. Now, to kind of segue into what you have going on, I know you just wrote a book. Congratulations.
Yes, thank you.
So what exactly kind of stuff, to spoil it for everyone, it's about mobile homes. So and investing in mobile homes. But I've known you for a while now, and you've been kind of preaching this. But what have you put into this that you think people will really get a good benefit out of? Give us the kind of the pitch that you tell people about why they should check out this book that you have.
The book is called How to Buy Mobile Homes, and it is a story of how I went from being an evicted tenant to enabling my wife to be able to retire at the age of 29. And throughout that entire story, I'm teaching you about mobile homes. And by teaching, I'm just telling you stories. Look for this. You need to find the tie downs, the straps, the piers. I'm giving you the information, and it's exactly what I'm doing. I'm not filtering it in any way. So it's a fun story. It's written at a very easy to read level, because that's how I write and that's how I read. So I wanted something that I can understand. And it is on Amazon. It's a fun, easy read.
I mean, you need to sell a little bit better. I think you're currently sitting in a bestseller spot in your category, right?
I am a bestseller, and it is, although I focus on mobile homes with land, you can take the information and buy them inside of parks, and then you would also get enough information to know about mobile homes for parks, but it's not written for the parks. It's written for the mobile homes in particular. And yeah, it was a fun 8 months of writing, and I put my 20 years of real estate experience into 8 months of writing, and then into 140 pages. And I crafted something I was really happy with. And as you said, I've gotten to the bestseller, and as of today, I have 50 reviews, which is heartwarming. And I just was crazy that I have that many reviews so quick, and people are liking it.
Awesome.
I did something right.
Absolutely. Yeah. It's great for people to understand that, it's, and having looked through it, it's not something that I haven't looked through. So it's a great guide, and it's, good, because I feel like there's kind of a lack of good boots on the ground information. It's easy enough to kind of get on there and be like, okay, buy mobile home X, Y, and Z. So it's definitely a good guide for that. But for maybe people that aren't necessarily, they like to sit down and be taught something, you do have a class coming up, right?
I do have a class. Now, this class is not on mobile homes. I'll have another one later in the year. But this class is called Full-Time Landlord, Part-Time Work. It is on my management system, and I've taken a lot of Dave Tilney. I'm sure you've had him on here before. Mm-hmm. It's his philosophy of how to manage. I'm a very big Dave Tilney fan, but I just kind of added my own flair to it, stuff I've learned from other people, and systems and technology. I focus a lot of that avatar that I spoke very strong about, because it starts there and the rest of it builds from there. So it's my 4-step system. It's exactly what I'm doing, what I've learned from, and this is always changing a little bit. A lot of my goal is to get the prospective applicant to disqualify themselves. I'm not in the business of making money on applications. I'm in the business of how can I utilize my time the best, but still have an actual relationship with the resident. I don't want a system that we never talk to them, because most people don't want that. And I focus on that. Like I said, it's a system. The documentation, and a lot of the documentation is, if you ever got in trouble with fair housing, I hope I never do. But if I do, I have everything in my system to show that we did everything we could to give everyone a fair chance. And it's not only because I want to be able to prove the fair housing, I actually want to give everyone a fair chance. That is my true goal.
Yeah, absolutely. Well, so if they want to find that class, how can they find out about how to sign up?
Lifestyle REI, LIFESTLE-REI.com, and it'll be on the page. And for anyone that's listening to this or Advanta customers, you'll get $300 off by using the coupon code Advanta. But you got to do that by April 5th, because I want to reward people that take action. And I don't want to be doing all the last minute work, because if I'm doing all of that last minute trying to fill the seats, it's not going to be fun for me. And if it's not fun for me, I'm not going to teach classes, because this is a fun passion to help pass on education, not just to make money. It's a passion project for me.
And I don't believe you mentioned when is the class?
It is going to be April 16th. It's going to be in Plant City. And if you're in Plant City at the class, you're going to get lunch provided by Advanta IRA.
Hey.
And there's no upsells of the class, and it's a money back guarantee. If you aren't happy at the end of it, I'll give you your money back. So I'm not selling some other course or anything, no other programs. There's no coaching afterwards. We shake hands and we're friends and colleagues, and maybe do business afterwards, but that's it. There's nothing planned.
Yeah, absolutely. Well, again, thank you very much for being on with us today, Adrian. This has been another edition of the Alternative Investing Advantage podcast. Thanks, everyone, for joining, and have a great day.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.